Hello, students, and a very warm welcome to this new lesson series on the chapter Recording of Transactions 2. This is the furniture workshop place where Jim and Minnie begin their discussion for today. The furniture business is relatively smaller now, so it will be able to record the number of transactions in one book only, that is, the journal. Now, as this business grows bigger, it will become really difficult to journalize each transaction. Now, what is to be done in such cases? Jim has the answer. A journal is subdivided into special purpose journals, each meant for recording all the transactions of similar nature. Now, these special purpose journals are called day books or subsidiary books. Now, most of the transactions are recorded in these day books or subsidiary books. However, the transactions which cannot be recorded in any of the special books are recorded in journals called journal proper. Now, let's understand the few important special purpose books. Cash book, purchases book, purchases return, return outward book, sales book, sales return, return inwards book, journal proper. Minnie and Jim starts discussing the books one after the other. Cash book. We will start with the cash book first. As the name denotes, this is a book which records all the cash transactions, be it receipt or payment. Now, cash book can be of two types: single column and double column. Just see this cash book where we find two sides, that is, the debit and the credit. And particularly, there are two amount columns, one for receipt of cash and the other for payment of cash. Now, this book becomes the book of original entry, where postings are made to the respective ledger accounts from this book. Now, double column cash book is a little more detailed. And how so? Yes, we have both the bank and cash columns here. Minnie is well versed with the bank thing, as their furniture shop has the current account in bank. The current account balance does not fetch any interest from the bank. However, a small amount of charge, generally called the incidental expenses, are taken by the bank for the services rendered. Minnie is all excited with the reference of the bank terms. Whenever any check is received from any customer, it is deposited in the current account held with the bank through the help of the pay-in slip, which looks like this. As we can see, this is a perforated sheet which has a counterfoil as well. This can be returned to the customer from the bank counter, acknowledging the deposit. This is a sample check which we can see. We write the name of the person to whom the money is to be paid to. As you can see, the words bearer coming here. So money in this case can be paid to the person whose name is written after pay or the bearer of the check. If the word bearer is struck off, the check becomes an order check, meaning the check shall be paid only in the name of the person whose name is written on the check or to his order after the necessary identification procedure. Now, what are those parallel lines drawn across the check? Well, this is the cross sign, which indicates that this kind of check can only be paid through a bank account and not over the counter. Now, when the words account payee is written in between these lines, it's called an account payee crossing, and it means that the amount can be deposited only in the same named bank account of the person whose name appears on the check. Also, in between the crossed lines, the name of the bank can be written, and this kind of crossing becomes the special crossing, and payment can be made only to the bank whose name is written. Now, let's quickly get back to the double column cash book. Just like the cash column, all payments into the bank are recorded in the left-hand side, and all withdrawals of the payments through the bank are recorded on the right-hand side. Now say what happens when cash is paid to the bank. This is interesting. We need to simply record both the transactions in the cash column and bank column as well. Against such entries, the word C is mentioned, indicating that this is a contra entry. Now we come to the concept of petty cash book. Now, in every organization, a large chunk of small payments are made. For example, postage, office stationery, and so on. All these expenses are generally repetitive in nature. These transactions are really petty considering the amount and huge in volume. So in order to ease payments, a separate cash book is maintained under the petty cashier. This particular book is called the petty cash book. The system is called the impress system, which the petty cashier works. At the beginning of a predefined period, the cashier is given a particular amount, which is fixed for every period. This is the impressed amount. The petty cashier keeps on executing the petty cash payments from this amount, and it keeps on depleting. After the balance reaches a lower cut of the amount is refilled, and the balance goes back to the initial starting balance. A typical petty cash book looks like this. As you can see, it begins with the amount received column, then date, particulars, voucher number, and amount paid. Interestingly, see this amount paid column is bifurcated into the smaller items which are commonly grouped. For example, we can see here different columns for postage, telephone and telegraph, conveyance, stationery, and miscellaneous. Now carefully understand how the balancing happens here, which is quite easy. At the end of the period, the balance is CD, and after receipt of the balance impressed amount, the next payments start again. Well, that was a lot of cash book, students. We'll close our lesson here and see you soon in the next part of the lesson video. Till then, happy learning.